Hello, hello, hello. Happy Monday, everyone. How is everyone doing today? Hope everyone had a wonderful, wonderful weekend. Sterling in with the numbers, the news, and what may be some political commentary. Durable goods, huge bounce today. Huge bounce in durable goods so far. Yeah, is yen is strengthened again. Now it's in double bottom territory. Does not mean anything yet, but I am keeping an eye on that. What else do we have going on? Good morning, Patrick. I'm looking for Sterling's good morning. Sterling's good morning's in here somewhere. There it is. Good morning, Sterling. Uh yeah, this everything. So you got the Polish army. If it was not a missile, maybe it was a UFO. Uh, we got that. We got Chinese military breaching to Japan. So everything's just dandy. Oh. Is anybody else getting exhausted with the world? I mean, this is, I am just so tired. Good morning, McRangers. Yeah, this UK government prepares to deploy asylum seekers across the country. Immigrants will be given priority over Britons when it comes to finding housing. Uh, and did you see all those facial recognition security vans that they're deploying in England now? It would, wow, coming soon to a neighborhood near you. Everything is so backwards. I don't know what to make of it. I just don't know what to make of it. Good morning, Jacob. Good morning, PMG. Good morning, Martinez. Good morning, Royal Palms. Good morning, Jacob. So, all right, let's get to it because this is a super busy week. Next week is short trading week, so a week today, remember, for people not in the US, is Labor Day. So, next Monday, markets will be closed. However, until that time, we got another super busy trading week. We already had durable goods coming out, big bounce in that. We got the Dallas Fed Manufacturing Index, expected to still be in significant contraction. And we got some 3 and 6 month bill auctions. Tomorrow, we got the house prices, consumer confidence, Richmond Fed Manufacturing and Services Index, Dallas Services. So but it really kicks off. We got some Wednesday. There's not much in the morning. Well, I guess if you're up real early or in Europe, you got Waller speaking. We got the EIA numbers, but the big thing is NVIDIA after the close. NVIDIA, because it's such a mega cap and can definitely drive the market. And then we're heading into the second estimate of the GDP numbers back for second quarter. We're into the jobless claims. We got the quarterly PCE numbers. So Wednesday afternoon, Thursday morning, and then Friday we got the PCE numbers and the final August consumer sentiment numbers. So the week is very backloaded. Very backloaded. So if you're going to take a nap, I'd recommend doing it at the beginning of the week. So far, we have oil. It's been on a short tear. Middle East has flared up again. Strong rally on Friday, following through with the overnight session since the Sunday futures reopened. We'll take a look at that. Sort of mega caps are mixed. Financials are sort of stronger this morning. Let's see. We have energy, basic materials are leading. Consumer cyclical is lagging. Followed by technology. Fed watch still has one cut priced in for 23 days from now. And then a double cut in November, then a single cut in November, and has this all the way back down to 3.25, potentially by this time next year. Fear and greed, upper end of neutral. Will we poke into greed mode? Can we get to greed mode before Wednesday, before NVIDIA? Can we get to greed before NVIDIA? PE ratio, 36, 34, nosebleed territory. What could go wrong? Today, not much in earnings. Tomorrow, not really a lot of stuff going on. Again, there's not really anything market moving until after the close on Wednesday with NVIDIA. Then you got CrowdStrike and Salesforce also. Thursday, you got Best Buy, Dollar General, Campbell's. After the close, you got Dell, Lululemon. And then Friday, not much at all. So really, I mean, even in terms of earnings, Wednesday, Thursday are the bigger days this week. No napping then. Good morning, Heinrich. So, see, I already crude follow through really nicely. We'll just start with, again, in a very key support area. This is not a double bottom, just two bottoms. So I'm watching for to follow through because it's pretty strong price action, very strong reversal day on Friday, which we're following through today. I'm watching for it to close about 76.90. By the way, there still is a roll gap here, which those aren't as important, but they can be magnet prices. So the magnet price is about 78.16 and then 79. The bigger level to really start crude possibly propelling higher is 79.62 from a harmonic standpoint. So that's where we sit with daily cycles still going up and weekly cycles still going up. So crude, we got daily and weekly cycles in agreement. We're going to close potentially above a minor harmonic today. So I'm keeping a very close eye on crude. Back to the S&P. S&P, lopsided double. But this is key on any pullback. The key level is 55.8275. Again, may never trigger, but that's a great area for short-term stops from my perspective. Why? If that were to trigger, it could take it back to the 50-day exponential. Now, it is against the daily rotation zone, so it is one of those lower probabilities. The bottom of the daily rotation zone is that first target, right around this 55.43 area, 55.41 area. So does that kill the market? No. The bigger thing for killing the market would be if we get below Monday's August 5th lows, but more importantly, there'll be front run patterns before that because that's in major double top territory. Now, we're grinding up against some significant highs. We're not at all-time highs yet, but if we do break out above these highs from last Thursday, miners 56.75. More significant is 56.86, and then there's not much. We have a clear path move all the way to the high area. By the way, if you get above 56.86, this mini lopsided double is off the table. Okay, it's still, from my perspective, even if that comes off the table, a really good area to at least trail a shorter term stop from any positions from the bounce back move. So that gives a little shorter term level. The NASDAQ, by the way, first, before I get to the NASDAQ, Anissa, good morning. How are you doing? It did not get to the 75 harmonic and did not close above the 62.5, and it stalled out there. So today I'm still watching on the NASDAQ for a 4-hour close above 19,844. If that happens, 19,904, 19,965 roughly are the next targets higher. So that's, still is a spike low from last Thursday is still a very key area, but the major support coming in about 19,380. 19,380 is very major support even on a breakdown move. Keep in mind, we could be in for a slight grind higher / choppier trading into Wednesday. Hey, Charles, good morning to you. So that's what I'm keeping an eye on now. The next harmonics for the NASDAQ, because we have closed above the 62.5, are 20,083 and then possibly 20,529. The NASDAQ, the Qs have hit double top territory. The futures have not. Let's see if they hit that before NVIDIA earnings. Dow. Keep an eye on this, even with the stair-stepping move. It's April 5th would be watching because that would be key in the Dow. Really paying attention to that because that would be also back below the 200. Other than that, the Dow on Friday reconnected with the 87.5, so the 87.5 rule is completed. Next key target in here is about 41,550, and then the 41,672. And if it breaks to new highs, we got, what do we got? We got reverse harmonics. 42,063, 42,455, above 42,455 takes the potential double off the table. So those are the key levels to remember to the upside. Very significant support. Bumping this down just a hair with the rising rotation zone, but very, very significant support back at 41,000. The Russell, because my gosh, the Fed's gonna cut rates, is gonna save all the small caps, all the micro caps. It's gonna just, we're gonna party on because of the rate cut. The Russell, even with this stair-steppy move, I'm keeping an eye on here on a weekly time frame. Now, this may never trigger. I'm still watching for the Russell to possibly reconnect with 2,280, but it is on the bigger from Monday the 5th lows. You have this potential double, and that look at the weekly 200. So that's the bigger picture, something I'm keeping an eye on. Minor, my support levels back at 2002. The VIX still elevated. If this starts grinding below 16, I'm going to be watching that potential choppy stair step higher going into Wednesday. DAX closing above another key resistance level, which is now support, retested earlier today, but going to be still watching for the DAX, 18,780. Notes, let's just look at the yield. The yield, I'm really seeing if this can get down to 374 again to put it in potential. Now, this would be a very weird pattern. It's very extended. It still technically would be a lopsided double. Lopsided like this is a lower probability, but that just means I'll be watching should something happen. The highs from August 8th are very key. Other than that, the trend is still down. You can see stair stepping with the rotation zone. So the peaks into the rotation zone, we're rotating down. But the next targets are just 3.74 in terms of yield, and then especially 3.7. I'm really interested to also see, we closed back on Wednesday of last week. The close was on a yield perspective 3.772. I'm seeing if we definitely close below that again, because that would be on another breakdown on a closing basis. Today is a bank holiday over here in UK, but not for the USA. Well, we got the holiday next week. Sorry I started without you, Richard. I did not get the memo. Rate cuts are bearish. I agree. Markets want to celebrate rate cuts, but traditionally, once the Fed starts cutting, you get the bigger pullback. Also, once the Fed starts cutting, we should get the final significant push higher in the inverted yield curve, which, remember, popped out of inversion and back slightly inversion, but it's still building higher lows and higher highs. And that historically is not good. Dollar index. keeping a close eye on this now. We're in some very key support. We are at cycle bottoms, very oversold against the weekly 200, against a prior major support zone. It does not have a strong bottoming pattern yet, but I'm keeping an eye out going into this week for a potential bottoming pattern in the dollar index. So that's very, very key for me, which means I'll be watching for a topping pattern in the euro. We already looked at crude. Gold, we do have a minor potential double top, so another great area. And this could be out of the way. Now, I'm not saying this will ever trigger. Not saying it will ever trigger, but this is a fantastic area if it's still valid for a trailing stop, especially for anything to the shorter, in the shorter term. Other than that, we just hit this 2562. The next thing is to retest the all-time highs, 2570.4 and then 2581. Also the reverse harmonics take us to about 2581 to 2586. The yenster strengthening, but put it in potential double bottom territory. So that means the highs from the 15th are very key in the yen. The trend is still down. Rotation zone is still in place. Excuse me. But that's what I'm keeping an eye on longer term. In the short term, and I'm keeping an eye on this very key topping area from last week, 146.48. Euro, we got some divergences. Also, back in the dollar, we have momentum divergences on the pushing down. Let me jump back there real quick. Dollar index, you see on the daily, we've stair-stepped down, and we're starting to get the divergences. Also, we got waning momentum, and we got cycles, as I went with the bottom, and we're very, very oversold. That's another thing. Now, we could come down, roll again, form a triple divergence would be even more powerful, and I'll be, again, watching for that bottoming signal, but I'm also watching for that topping signal in the euro. We have the divergences in the top. We don't have a strong topping pattern in yet, but we're against very major resistance in the euro. And the euro could easily at least pull back in the short term to this 110.50 area. So that would not shock me. Spiders, again, all-time highs 565.16, so that's the short-term magnet price, and there's still a gap left behind there. And then 572.02 should keep running. Very key support in the spiders, 562.25, and then your major support is about 556.50. The Qs, the spiders were also in major double top territory, but that may never trigger. The Qs also in double top territory, which may never trigger, and you still have the magnet price going into NVDA earnings of 493.51. Let's see if that can get there. Very key support I'm watching now is Thursday's lows, 473.81. You've been in holiday mode these past week and a half, but always falling back in the saddle next week. Well, I'm glad you've been in holiday mode. You need to take a break every once in a while. Nothing going on with Bitcoin or Ethereum, really. By the way, the Qs, IWM, close that 50% harmonic and now rolling over. Which again, I do believe in the long term, the Russell will outperform the NASDAQ. But that could also be, they could both sell off. But the Russell does not have to sell off longer term as much as the NASDAQ. Remember, this doesn't have to mean the Russell stays super strong and the NASDAQ tanks. They could both go down, but the NASDAQ, which is which is still in nosebleed territory from everything being priced in, is ripe for a potential rollover. Do we have it yet? No. Speaking of NVIDIA, magnet price going into earnings is still 134.50 based off the 87.5 harmonic. It is in potential double top territory on a weekly basis. However, if it crushes earnings and gaps up 147.02, 153.28 above 153.28, takes a potential double off the table. Tesla, not much to talk about there. Extended their 0% financing in China again. Riot has been the laggard in the crypto space, but in the short and long-term charts, does anything look? It looks like just look like a mess to me. Do you see anything of consequence? Well, let's take a look at the long-term charts. Other than it's trading now below very, very key support. Just based off this, I'd be looking for rollover plays. I would be looking for rollover plays. Is there anything in the short term? No, but even on I mean, this is not a healthy looking chart at all. I want to just put up the harmonics from these key lows. So, I mean, the next, I'd be watching for this to break down to 543 after the next rollover play. I'd just really be using it. Look how well that lines up with the prior key support level. So you look at the 75 lining up with the prior key resistance. Look at that. Retesting support area. The resistance zone I'd be watching for is anywhere from 894 to 977. If it can even bounce that much, and then a rollover play. But is there anything like setting up today that I see? No. All right, let's peek back to the S&P going into the open. Little mini double. It's very sloppy. Still, it would need to get down and close below this on a 1 hour with a follow through on a 1 hour basis. So from a high-low perspective, I'll pay attention to 55, 56, 52, 25. But you see how well it's been holding this 1 hour rotation zone. And so what would that be is if we did sell off and we close below that, we might be out of the way of the 1 hour rotation zone and we get the little pullback. Other than that, I'd be watching on any pullbacks for support to come in around there or even in front of there potentially. You have a pretty strong support base at this 56.55. You break above, depending on where this thing opens with the tick, 56.64, 56.65. 56.64, 56.65. Then, as I listed earlier, 56.75 would be my target, my first target. All right. Thank you, everyone, for tuning in. Hope everyone has a fantastic trading week. And I shall talk to everyone later. Bye for now.